Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 295 edition of Investdata Trading Academy Live with Ambrose. Yes, I will say welcome back to our live class for almost more than five second session. No class, I've not been around. But I want to appreciate you for your concern, those that call and those that send message. Thank you very much. I went also for conference and I'm back. And I'll tell you, during the conference and all, a lot of things are shared from experienced traders across the globe that also were participants in that training. And at the same time, I'll tell you that our market is unfolding with some strategies and also some sentiment, and at the same time volatility up and down, and which calls forward real change in strategy to understand the factors behind the market. And also you personally as a trader or investor, you have your goal and you want to tailor your goal to achieve, you want to tailor your strategy to achieve those goals that you have already. This will help you to know to stay this market. But if not, when you follow the market direction or other people's trading plan, will be going up and down. That's why I said, despite the volatility in the market, trade your plan. And when you trade your plan, I will tell you, you'll be in a better position, whether the market is going up or going down. So far, you are combining your technicals and your fundamental effectively to also read the market. And don't put sentiment aside anytime you're taking a decision. Whether you're a long-term investor or a short-term, sentiment is very key in any market because the forces of demand and supply determine where the market will go. And I'll tell you, it is this sentiment that will determine where price will go. And that's why price of any stock is anything that is very, very important. Where the market will go will be a function of what is buyers and sellers doing in any market. Yeah, back to the global market. As we speak now, the market is made globally, and I will tell you the factors behind this, Mr. Trend globally is not far-fetched. We have seen that most macroeconomic data that emanated from this different climate also influencing decision in that environment. At the same time, the earnings season that have kicked off not only here in Nigeria, it's across the globe because we have the same calendar. We are seeing also those impressive earnings also impacting this company's performance in that region. And that means you as a trader investor, anywhere you are trading or any market where you are, you need to understand what is happening and which sector benefit from what is happening and how is the market reacting to it. And that's why you need to understand the sentiment and also the volatility in the market. As we speak now, I'll tell you that US market is missed. And why is it missed? We saw the positive data that came last week on on their inflation data, and which also the producer price index also was also positive. And the recent thing that came was that in that market the history again has changed a little, saying that the bond market was saying that the yield has touched lowest in this 2023. It is a sign that no fear of recession in that domain is gradually fading out, because if you are seeing your inflation data going as low as 3%, and also we are seeing also the bond market yield also drop, pulling back to 2023 low. It's a sign that yes, the impact of rate hike by their Fed has also played out. But they are also in a mixed dilemma as we speak now. Why I say so is that as the data that came from China in terms of their GDP, we saw that it was a kind of disappointing GDP for Q2, and could also tell you that the recovering of that domain, China and its zone, and also assist not really giving us clear direction, even when they've listed the COVID-19 restriction. I said this in this class often and often that since then they've tried to adjust rate, cut rate to by 10%. They tried to give kind of incentive to stimulate the economy. Still, they've not, because most of the sectors in that environment are still dragging feet, while others are still looking up gradually. If you're able not to turn the economy around, that's why we are seeing that their Q2 GDP was for me not too encouraging. But I tell you, that is also what is also influencing the market, both in Asia market, in Europe and in the US. And the unclear direction of what Fed will be doing in their next policy meetings is also what is dragging the market also in this direction, that investor will come in. But last week we saw the numbers, especially on Friday, the number that came from corporate companies like the big banks there. You see how market reacted to it to close almost 3 weeks high or 2 weeks high last week. But also this week we are seeing that same trend is also there. But it means that they're expecting all these positive numbers from companies. But because the Fed, how they have seen the inflation figure, they have seen the the consumer price index, which is everybody. I've seen also the producer price index. They also see, I tell you now that the boss see, they want to see what is going to do. Fed before the data for inflation came has also said that they are likely to do the last hike, and before this rate hike cycle will finally come to an end. But we've seen the data that comes recently now. It's a pointer that if they can even go ahead and stop the cycle, now they post the previous PCA, their previous policy meeting, they are likely to also cut. But I tell you, many market players in that domain are not really know what Fed is going to do. On that, they are still waiting. That's why we are seeing this oscillation. But I tell you, for the bond market, to put to the to the lowest in the lowest for the 2023, it's a plus for equity market in that domain. These are the things that is playing out. Go to to Europe, where we also were expecting to see the inflation figure coming from United Kingdom tomorrow. This inflation also the Bank of England next meeting also within the period this month. These are the things that are trying to shape the market there. Yes, we are seeing that also the economic data coming from that domain, Eurozone, are still equally mixed. Don't forget that this is what prices feed on, and the earnings of company also they are coming. But the good thing is that if in these mature economies, this Western market economy, we see that they have issue with their banking sector, but still the numbers that are coming from that industry show that the numbers are strong. It tells you that what I would like to see from our own our own market, knowing that our banks have been resilient in all this while, and we are seeing factors from this recent regulation or economic reform from the new government trying to also impact more positively on the bank's operation, not only also strengthen the bank the balance sheet at the end of the day. That's why in Nigeria market, I believe that the banking sector or other service sectors for this economy is where many investors will looking at. That's why I said, as we're going to discuss more on that here today and then tomorrow, how you should also position your portfolio and also your investment objective down here in Nigeria, how you should also know that it suits your own ideology, what you want to achieve, and also what is reality in the economy. Because if you say because you want to do this, others are doing, no, you must know that while you are in the market, your strategy is to achieve your goal, and also factor in the reality in the system today. Because I tell you, it's not every sector that you put your money as you speak now that you're going to make what you want to achieve. That means sector recession will continue, our prosperity will continue, but as it continue, you must do it with knowledge, not just because others are doing it. You understand why you understand that when others are panicking, when markets pull back, you are not panicking because you know why. I'll tell you, the last few days, last week when we saw the correction, even when I was training, calls were coming, markets going down. It tells you that if you understand why I said take profit when markets are going up. Don't say, oh, Ambrose, if I had to keep to your word, if I had what we are saying in class, oh yes, we want it, but if you are investor because you have a goal, you have your buy range, you have your stop loss, you have your profit target. You must also know how to implement all this. Not just having a goal with time limit. When you have a goal, you have a plan. You trade your plan so that you achieve your goal. That's why I say you must tailor this your trading plan to achieve your goal by factoring what is reality in the economy or where you are. You need to understand it so that at the end of the day, you won't be putting goals or strategies that are outside of your domain. Why other things are happening? You need to understand. That's why when we come to goal setting, I want to tell you how to do it today. If not permitted, if not, we'll be doing that by tomorrow on this live class. It's time that investors will have to come down and understand the market very well, because I will tell you a list of opportunity in the market globally and the domestic here. So if you look at also what is happening in the oil price market or commodity market, I will tell you with the recent deal that got signed yesterday between Russia and Ukraine and the war in terms of green deal, it's going to be that things are going to check as the Fed is going to meet, because yes, we are happy that the inflation is coming down, but I will tell you with this deal not flying, I tell you that it's going to change the cost of a commodity, the distortion in supply. That's also another thing what to factor in. Yes, we are seeing most central banks across the globe posting some doing a 25 basic point hike. Just what with this recent move and also what is happening in Ukraine and Russia is entering another dimension. And you see that is the fear we're having in the global market. And don't forget that Nigeria is not operating as a solution of what is happening globally. We need to put all this also into perspective. When we saw the weaker dollar previous week, we saw that there was the increase in consumption of oil. We saw oil price rebounding. But yet this morning, I think that it's a bit stable. That's why that the oscillation is not much. Still because of what stock piling by US and also despite that the GDP from China was not too attractive, disappointing. You can see that oil price still maintained around the 97.5 $58 per barrel, just because of what that the US is also kind of piling up their inventory to keep inventory, improve their kind of increase their inventory. These are the things that happen. But I believe that this did as say let's say another way they can go around it. I'll tell you, going to also change the face of what price of commodities, because this wheat and all those stuff has a way of trickling down to other products, bread and all those stuff. That's that they're going to see another kind of either rebound in inflation, or if they want to curtail it, because as far also crude oil also remain a bit below 80. You can see that since crude oil has remained below $80, it has also helped to manage the inflation in most of the economy globally, because when it was above $40, you saw how prices, because cost of this energy will also be moved toward to the final consumers, which are the price at which consumers also feel. But I believe that what happened now yesterday, and it didn't fly, and also what is happening in Russia and Ukraine is not slowing down to as we are seeing, unless there's no bigger power that comes now, or no lot of agreement come and they start coming down fine. But these are the things going to distort kind of supply, and also the central banks of the world have to factor it is also in. That's why I say, well, that's a fair decision in that meeting, even in EU, and also even like all of them are even the one that's coming here, in our economy, next week. There's also, they will be confused, but I believe that this is the time they will sit down also, know that the economy first before that thing. If you are doing the economy because you want to fight inflation, at the end of the day, you might kill the economy for inflation, or you leave inflation to run. I think there's another way we can do it here down here in Nigeria, that we might not always be looking at interest rate to fight inflation, since we know that our own down here is different from what we are seeing in material economy. It also have another way for addressing our own inflation down here. Today, we had many companies that have given a license to import, but their fuels are already landing in Lagos. But still, we are seeing the price of fuel going up today again. Is it that dollar have changed and moved from $75 to 803? How it's going to influence the economy, inflation that we want to fight? You can see that the reforms we are seeing here, yes, we want to control inflation, we want to control it. It can't be possible at the same time, because anywhere in the world, the exchange rate, the inflation and the interest. This is what the CBN, the central banks or the monetary work for. You can't control this steady at once. We have seen that you have adjusted your rate already, your exchange foreign exchange rate already to flow. Also, inflation is already high, and we're seeing an interest rate. How are we going to manage this steady at once? I think this is time for the committee to sit down and see how they're going to put it. Are they leaving a rate or change for now to see how the new exchange rate and the new informal exchange rate and what the inflation is doing, to find a level? Because if you want to touch everything at once to control inflation, already the exchange rate and the fuel is also putting pressure on inflation. And if you want to increase your rate again, you're going to also squeeze the economy, because cost of production, cost of living is already high. I think these are the things we're looking at, and that's why you, as a trader, said you must tailor your trading goals and also your strategy to what really in the economy, which sector are going to benefit from all that is happening. The banking sector, is it the oil sector, is it the manufacturing sector, is it the industrial, is it the service sector? You need to look at all this so that you know how to position your portfolio. It's not a time to just invest in banking stock or just investing. You know why you are investing in banking stock. You want to go to you want to go to Unilever, why investing in Unilever? You want to go to Nestle, you need to understand why you are putting your money there. And at the end of the day, you can stay ahead of what inflation. Because I tell you that today, like I was saying in the channel today, that if you really want to stay above inflation, the only place you can look at is what the equity space. Especially, there are some low cap stocks that can give you even the theory of what of interest of inflation and that is how to preserve your money. Then put your money in a fixed income market, even the bond and the treasury bill. We, as we speak now, in treasury bill, I'll tell you that the 1 year return is less than 10%. Why in bond, even though you are staying for 5 years, 6 years, the highest there is what about 16% yield. And the time will take you. And also inflation, as data released yesterday, it's about 2.79. And later we can hear that the people are saying that they didn't factor in the resource removal. I mean, if they've done such, it would have been around around 30. You can see, you need to, for those that are in those kind of instruments, you need to also play with caution. And investors that I also want to play safe, if you look at, you are in commodity-backed equities, that you know that the commodity is some of inelastic demand, and even when they increase price, the price of that the demand for that service or that product will still be going on. And at the same time, also look for what we call property-backed equity. Those property-backed equity are those also, now that inflation is around the corner, as increasing up, I see that people want to put their money in real estate, and real estate business will also be booming. At the end of the day, you need to expect to see that real estate performance will change. No, these are what we should be looking at, so that at the end of the day, we know that we are positioned ahead of how to hedge against inflation, and also take advantage of what's happening in the economy to make money for yourself. Don't just follow the bandwagon in the market, but have what your plan and trade your plan, because your goal will help you know the kind of plan to achieve that goal. Because if you don't have a good first place, how will you plan to achieve it? Because any goal you have, there must be a plan, a strategy to achieve that goal. And that is why I said trading from the one, your weekly trading, your monthly trading, your 90 days trading, all has what the target, because you have what you want to achieve at the end of the day. And this is how to go in this market. Don't just follow bandwagon in the market. Trade your word, your plan, and you must have a goal for you to trade your plan. It's your plan that help you to achieve your goal, and you must also factor economic reality, into your plan and into your goal, so that at the end of the day it will be achievable. Don't just build, a castle in the air without achieving. You must have reality that if I trade for 1 week, what will I want to achieve? If I trade for 1 month, for 90 days, for 6 months, once and I tell you, go and check the market performance so far, even on month to month, and quarter to quarter, the market have also have returned a lot of good things for investors. If you see the index doing what it's doing, most stock have double what invested, even triple or even 5 times what invested. That means you must understand how to trade this market. Don't just stay one place and look or go around. I tell you, those that are in the master class, just in the first week of of July, they've hit almost 57%. They took their profit, and I said it in this class. This started now the market started to rebound now, which we are seeing. Even look at the chart that we will display, we are seeing that trend coming up. Like I told them today, that we want to confirm the market rebound. Once we are seeing it becoming stronger, come back, because factors that are going to support the market are increasing. Before now, all the factors that brought the market up are still very, very much intact, and new ones are added to it. Now, at the end of MPC meeting next week, we'll now see where the market is going. But whether the MPC there's adjustment of flat, already investors should know where to put their money, because we are seeing inflation already, how to end inflation, and we are seeing what is happening, interest rate, we have seen the inflation, and we are seeing you kind of exchange rate we're having. It's a free market now. You can see that it has moved from 758 or 57 to almost 803 now. Even international airline have said, okay, as from today 18, they will exchange by $1 for what to 803. You can see, you need to know wow, and also which sector also going to benefit from air service. If you know that, before COVID-19, what is happening? People were not traveling. Now people are using internet or this, but now after COVID-19 passed, that industry improved. You should know, like I said in one of these slides that 2 weeks ago, that there's a nation, either India, that demanded for additional 500 extra for an airline business. Also the same thing in you, and that is the highest so far this year. The last one was 448, and the last one that came now, the last one before the 500 was 448. Now, this means people, airline business are expanding globally, people are flying more, and that's what tells you that where you also should be as a trader or investor. You must understand the reality happening in the economy, and also tailor it to companies, and also look at the sentiment that's driving it. I tell you, anytime, any day, it is fundamental that give market direction, also that drive volatility. While your technicals will tell you the right price to buy and what to do at the right time. That is why in this class, we will start from what is happening globally to take it down to our market, and also come back to the chart to conclude, so that we get the picture, not just looking at the chart alone. We must know what is behind the chart, and put it what activities of what buyers and sellers. And that is why sentiment is key whenever you are in this market, or whenever you are trading stock. And any asset you trade that move up and down, because it's up and down, you must know what is the demand level and the supply level, so that you know at the end where the price will move to. It's very, very important that we know all this, so that as investor or trader, we won't just be treating ourselves at the leg. We must understand this market and play it wisely. Back to our market here locally, want to look at what is the market doing now right away. Is the market bullish or not? Want to know. Like I already said, that before we go to the chart, you must look at the state of the market. And now we speak that the market is also in green at this hour. But we want to look at what is the factor behind our market now. Now the market have suffered losses last week for three trading days as a result of profit. But so yesterday they improved buying interest, and which have kind of hit our people in the group, and also in the forum we have that. If you check the buying sentiment in the market from the first day the profit taking started in the market, on that first day of Friday, we saw about 4% buy for that day. So market losing almost 2.47 that first day. The other day we saw market that day was just 1% buying, 99 sell position. But on Friday, from 4% to 1, we saw on Friday about 20% buy position. That give us an insight. So let's watch what happened on Monday. And on Monday we saw 60% buy and 40%. You can see that the mixed sentiment came up on Monday fully from almost 20% buy Friday to 60. This morning also was seeing that position also was seeing more buy coming back, and these are factors because of what investors are looking at. They expected a Q2 number that will give us a clear direction in terms of company performance. Don't forget that this company performance price will feed on to what to move, but earnings is very, very important. We have seen what is happening in the economy. I say fundamental is very key. Which sector will benefit more from this? What is happening, in the economy, and you start keying in ahead of more number, because this is just we are seeing a Q2. Already Q3 will be coming from the month of what? The month of October, and you want to look at in the new quarter we have entered. This is the first one. What is playing out in the economy? Which company will be able to survive? Which sector will be able to survive? Companies that sector will to survive. What are going to edge against what is happening? Which one has well, even though there is increase in price, which their product will be selling, or their product will be on the on the on the shelf. You need to understand all this so that at the end of the day, you know exactly what you are. That's why it's very, very key. As to speak now, the market is doing 63,262.22 point, and they I tell you that it's up by 318 point what 0.87 basic point. And market is doing almost as to speak now 0.4 0.48, it's almost a 0.5 as we speak in terms of percentage gain, which is a good one. And if you look at the market breadth is still very, very strong. We're having a 32 gainers, 34 gainers, and 16 losers on the. You can see that this is a positive market breadth, and we're seeing greens on the market, more buyers now and more sellers. I can see that the profit taking has slowed down yesterday. Today, I think that buyers are taking over the market. Just as yesterday, we had about 42 gainers and just a 28 losers. This hour we're having 34 gainers already, and 16 losers. It says that the market is changing, and this is time after the pullback. Like that, pullback is not when to start panicking. It creates opportunity for you to buy. Like we said this morning, if you are all those that are in a position, say hold your position and watch. But where you are still in profit, nothing supporting your profit. But once you know that you are pullback, you want to average down because the fundamentals that attracted into that component, if also you should buy it, are still very, very much that. You hold your position, you don't need to panic. But when people are panicking, you are about to sell. After selling the next, you see the stock going up. Unless what attracted into that components are not there again, like I always say, that is where you can start running away from the market. But as we speak now, we want to look at the top losers and the top gainers. As we speak, look at the the loser chart that they have about 16% in the loser chart. We're also seeing that Japan Gold, FTN Cocoa, we're seeing Sovereign Trust, Insurance, and NSL Tech and the Stanbic IBTC are on the loser, the top losers as we speak now. And we're not surprised on this stock, but profit taking is still on in that stock. And it's expected for them to pull back also to create opportunity, and also for investors or traders. All these penny stocks, I tell you that they are very, very volatile, and you have to play them with a lot of caution. They are good at giving money, but most times when there's a turnaround and things that are not going in favor of them, to come out of these stocks are very, very difficult. That's why you must monitor how you invest in them and how you're able to balance your portfolio at any given time. But for Stanbic IBTC, for me, it just profit taking, pulling back to around the 57 naira now is good, but let's still watch how far it will go. Then if you look at the gainers charts, the top 5 gainers, we're seeing that me and Baker is leading the pack right away with 10% up, doing around the 5 naira 50 kobo as we speak. We're seeing Police Microfinance also on that chart leading also with 10% maximum gain. And don't forget that for Police Microfinance recently, I think that we were given license for going to commercial bank, and I believe that once able to raise the fund, they are likely to continue that. And internally have bounced back again. After touching 37, it pulled back to as low as 23. We're still now back again to 25 on almost getting a 9.9% on the PZ also. We saw the positive earnings, but because of the valuation and all those stuff, people took profit. But I believe that on the strength of their earnings they posted, I expect nothing less than 2 naira from now as dividend. If that comes, that will move the price higher. Already it's selling below 2 naira. That is more than 11% dividend if they pay 2 naira. I think that's the attraction right now. For those that want to take position, you know why you are there. If you are aiming for dividend, you know why you're there. You're into capital position. This is the opportunity for you to take advantage. And also, General also is one of their match accounts. We saw positive number there. But I will tell you that I want to be very careful for that General. I take time to look at the price, the earnings. I'll tell you that is the kind of rebate or renegotiated interest that boosted that number is not really from their business, so that you have to be very careful using that number alone to jump into that stuff. Also look at the volume traded there. because when I take time to see that nearly all the banks that they bank with give them rebate or work, and they adjusted the rate, and that come as a plus in the account, and that's why they posted impressive number for their March year account. And no dividend will declare because they know the kind of number they posted. For me, I would rather investors be very careful. Don't follow stock that you know you don't have history, or just coming out from where they have been in a moribund state and now you want to fully jump into it. You have to treat that kind of stock with caution. That is for Chalara. Let's quickly look at the in terms of volume. Volume as we speak now, we're seeing that the Japan gold is leading in volume. It was 101, no 101 no million share traded so far in Japan gold. Also, we're seeing the FCMB also coming up powerfully in terms of volume. Almost 80 80 million volume, also 80.3 million share traded so far at 6 naira 12 kobo. Also access corp is also on that list, 16.8 naira 80 kobo, traded about 39.9 million share, that almost 40 million share. And also Dancer Dangote Cement also that 39 point also 3 million share traded so far, and Sterling Bank 3 naira 73 kobo, 28 point something. These are the top in terms of volume. For me, these are good sign that we are seeing activity coming back to the market, and it's a good sign that at the end of today, I cannot conclude that the bull is back. To know at the end of the day that you want to wait for the market. Then tomorrow we'll know what stocks, or wait for the week to see where we can position for next. But for those that are thought that pull back, you can see why I said should go extra patient. Market is also coming back powerfully as more earnings come from next week to change the fare. And that same next week, we are going to see the PC meeting. We're going to start seeing more numbers hitting the market next week. That will also change the face of the market again. Let's quickly come to the chart to see. There, like I'll tell you that before you do anything on in the chart on the market, what's opening, look at what is the direction the market is going. Market is still trending up, and see that we're seeing a markup phase gradually after the market have kind of stabilized on Friday. We saw some kind of pullback, on the bigger candlestick. You can see the two here, but the market came on Friday. You can see the kind of base they form here, like a strong support level. The next day on Monday we saw a reversal. Today we're still extending it, but you need to look at the market is trending up now. Market is making a higher. Yes, you can see that the pullback now is still making high despite that there's a pullback. It's still looking at uptrend. For me, it's a good one. I believe that these factors that we're expecting to impact the market, especially the earnings and other, also give us a clear direction. But if we want to draw the line, this is a live chart, and I want to tell you that from this point, I want to look at something. Okay, let's start from here. If we take this line off from here, up here, to cut this way, you can see, okay, 2 points here now. Touch, yes, good one. I see this, from here to here, I see a touch here. Yes, that's why this one outside defense, a good one. What I'm saying is that we want to look at what the market is doing in terms of a trend. Trend is very, very important that we need to understand also. Also, if you look at this trend now, from here, look at this level, from this point, let me just take it here. Here, this strong level, a strong support level that we also need to look at. You can see it here, and also this is another strong support level, and the market was trying to adjust down. It's another strong support level. This level too, take it. This is a resistance level that don't support, because as market are broken down, I didn't touch it. This is another support level that you want to consider again. That's why I said the power of resistance and the support level is very, very key when we are looking at your chart. It helps you to have a clear direction where the market is going and what is about to happen, so that you will not be left behind. You can see here is another support level that we can see now. Yes, the recent support level that we can read from here. And in between here and here, you can see between this support level and resistance, there is a gap to cover with risk recovery until the market break out this 66,000 that it touched before coming down. That is when we now confirm a new all-time high was continuing. But right now, it's a good story and a good move that market has stopped here at this strong support level. The market rebound. And that demand started increasing here on Friday. buying started on Friday, we are seeing also extended to today. You can see you need to understand all this so that you will know exactly what is happening in the market at any given time, so that you won't be panicking out of the market because of what, because of the trend. Volatility is there in the market at any given time. You must understand how to be there, buy low and sell high, and also when to take profit is very, very, very key. But as we speak now, I'll tell you that the market is still moving an uptrend. As far as the market is above what, above the trend line. You can see the trend line I drew here. So that means the market is still trending up. The bull is still in charge. As we speak now, there's no cause for alarm in the market. Let's quickly call up our indicators, right, to help us to have a clear direction what is happening. I've seen the price action or index action, sorry, but index action will tell us what's happening. Let's call up other indicators. It's very, very important. We'll take our MACD, also our money flow, and our T line. I think these three lines serve as what, as a resistance and support for us, for those that understand what I mean. Because when you see the T line below the index action or price action, it tells you that the market is what, in the up direction. But once you see the T line standing as a resistance, says that market is what, in the down direction. As we speak now, market is also on the on the up direction. Yesterday it tested it, but this hour now is trading flat on the T line. Once it's confirmed a breaker, that is a new trend already we are seeing. And you can see here that there's buy position. But if you look at what is happening, even at the market started to go up, already seen a very divergent in terms of at the MACD. But don't forget that MACD is also a lagging indicator. But want to confirm now what the money flow is doing. Money flow is also looking at slightly okay, it's looking flat, not down as we speak now. Before the end of the day, we'll know if more money will come to the market. But for money flow to remain above 70, from all this why say that there is fun in this market, and as a result of what there is fun and position taking, and also gradual return of the foreign investor and institutional investor also a kind of reshuffling their portfolio to know who settled to acquire more ahead of what, ahead of their the half year result, and also targeting the end of the year result of this companies in different sectors, because it has a way of influencing their decision and also impacting their portfolio. Good thing that money flow is very strong above 70. I will tell you this is a good one for equity market. Yes, we are seeing a divergence in terms of index looking up and the money MACD looking down, but we want to watch MACD very carefully at the end of today to see if there will be what we call a bearish convergence that will start seeing market looking up and instead of the MACD looking up in direction. Yeah, MACD is already, I told you, it's a lagging indicator, but I tell you with your T line alone, you can know what the market is doing. But I speak now, market is already T line, market is a flat above the T line, almost at top of the T line. It's a sign that once able to close higher than this, because the T line today, it's a sign for you to start taking position again, and also relax that yes, market has come above the T line. But when for that 2-3 days it pulled back, it just came down on below the T line on Thursday and tried to break out on Friday, which did it. But on Monday, almost broke out. Today it has finally crossed the T line to trade at top of the T line now. As I said, these are the market position. But look at the time frame again. It's very, very key. Let's look at the 5-minute time frame for the market. What is it doing right now on 5 minutes? On 5 minutes, no time frame. You can see that the market is just flat on the T line above it now. You can see, but MACD is also slowing down, and money flow is below 50. At least for 5 minutes. Your 1 hour chart is very, very important. On 1 hour chart, I'll tell you can see here that even the index is above the T line. You can see it on MACD, and for me, it's a good sign that yes, trend is coming back. And if you look at your MACD on a 1 hour chart, I can see strength back coming to the market, which MACD have shown us kind of moving in the same direction. That is a bullish divergence I'm seeing here. You can see the two are looking up in the direction. MACD is now bullish already. It has crossed to the other side. You can see it here up here. I can see the money flow is also looking to cross 50 on a 1 hour chart. Is a good time for me in the market as we speak now. But we look at 15 minutes, so I look at 5 minutes. For us to go back to the chart and also move to another thing. On the 15-minute chart, MACD is also positive. For me, it's a good one. And money flow is also 15-minute chart. I'm telling you, it's a good one for the market right away. I can see that it's above the T line. It's good for the market. The strength is already back to the market. It's a confirmation, which is also good for us to know as an investor or trader as we speak right away. It's very, very important that we know this. When we know all this as investor, to understand why the market is going up. It will help you to know why the market is going up. So at the end of the day, you know exactly what to do with the market. You don't need to panic in this kind of market because trend is up. I can see that all this MACD or the money flow index, you can see that they are all pointing towards what trend coming back to the market. That means you don't need to panic at all as a trader or investor. Because of our time, let's look at the few stocks that are on the gainer chart now so that we know what to do with them. If you look at what is happening in FCMB right away, let's see what is happening in MCMB on the chart. Yes, let's look at what is happening in FCMB on the chart. That will give us a good to know what is going on in that position. Yes, FCMB on a day chart now, you can see what the, already it has crossed what it is like. Even when there is sign, this sign we're seeing here in terms of candlestick, it's a sign, it's a weak sign here because it has gone up almost around the 645, pulling back here. You can see that the sellers brought it down after the price. That means people took profit again. That stuff. And also, if you look at the MACD is still also there's a divergence between this trend we saw here up here and MACD is still looking down. But money flow is high on the stock. We're looking at 79 point something for FCM, on the day chart. For me, it's a good one. But the divergence we're seeing now, we need to also watch it carefully to see what happens the next trading day. If you look at 1 hour chart for FCMB, on 1 hour chart, you can see that it's also the next candlestick formation here is also a good sign to resist decline. Look at it here, try come down and go up again, which is a good one. And if you look at the MACD chart here, it's already that's all a bullish MACD was seen, and money flow just pull back a little. You can see it here to around the 58. We need to also watch carefully to see profit taking also is still there. Even when it's trying to resist decline here, you can see it here. This on 1 hour chart. But finally, look at the 15-minute chart for this stock and move to the next one because of our time. And that is this will be the last one. Let's look at what is happening in Access Corp to finally run it up because our time is not spent. Sorry, it's like because we have not this class I have not go for a long time. Let's just quickly see what we can take at before time finish. Let's see. Let's quickly look at Access because they already giving me a sign for that my time is already spent. Yes, on a 15-minute chart for Access, I see that it's trading below the T line, and we are seeing also a bearish divergence with the price action and the MACD. But we are seeing the money flow trying to look up around 42, but at not cross 50. That means we have to also watch. But see this for 15-minute chart. For quick look at 1 hour chart for Access Corp to give us a clear direction. On Access Corp, for 15 minutes is very, very, very important. You need to know what has happened in the last 15 minutes on that stock. For 1 hour, you can see again bigger than the 15 minutes. But on 1 hour chart, the stock is trading above the T line. Almost flat there up. You can see. But the sign we have seen the last 5 minutes there was it's not too encouraging. It was up, it came down, also came down. Now trading flat. You can see that where it opened up, on the upside, gap up this morning. As we speak now, it has slowed down in the last 3 hours. You can see, and the MACD is still bullish, but let's still watch. And money flow is also looking up around 48, below 50. But across it, then that will not give us much strength. On this note, you can also see that the MACD formation, the chart formation also was seeing an uptrend, but we need to confirm because it does break out this resistance level here to test here until you sit around it before now stay. But this is another strong resistance level that we need to look at. It just tested around 1785 before pulling back to around the 1680 now. As we're seeing it, you need to watch carefully and see where it's going. But there's still potential in Access Bank. If you are in Access Bank, don't need to panic, pull your position. On this note, I say see you tomorrow and thank you for your time. Yes, we'll continue from here tomorrow. Enjoy the rest of your trading day. Bye.